Barron's published a Q&A article recently with small-cap growth investor Raina Lesser-Hanaway, a portfolio manager with Poland Capital, an investment management firm with more than $61 billion in assets under management. The headline small-cap stocks have been crushed. 3 with big potential. Describes perfectly the performance of small-cap stocks in recent years. They've been crushed. In the past 5 years, the S&P Small Cap 600 index is up 11.7%, less than half that of the large cap S&P 500. According to the annual periodic table of asset class performance from A Wealth of Common Sense, small cap stocks haven't led the table since 2016. Reversion to the mean suggests the asset class is about due for a victory lap. We have been talking for a long time about how we believe we may be on the front end of the next small cap supercycle. In 7 out of the past 10 years, large cap growth beat small cap growth. That equated to 5 percentage points of annualized underperformance from 2013 through 2022, Hanaway said in Barron's interview. So, it's time to consider 3 small cap ETFs to ride the impending wave of smaller stocks. Here are 3 ETFs to make a bet on the future. A value play. First up is the iShares S&P Small Cap 600 Value ETF, IJS. It tracks the performance of the S&P Small Cap 600 Value Index, a collection of stocks exhibiting the strongest value characteristics from the S&P Small Cap 600. IJS has 495 holdings with an average market cap of $1.67 billion, a P/E ratio of 10.0x, and a P/B of 1.2x. Given the additional risk, the ETF spreads around its bets. The top 10 holdings account for just 8% of its $6.5 billion in net assets. The top 3 sectors by weight are consumer discretionary, 19.62%, financials, 17.23%, and industrials, 16.41%. Stocks representing these 3 sectors are Meritage Homes, MTH, one of America's top home builders, Radian Group, RDN, a provider of mortgage insurance, and John Bean Technologies, JBT, a maker of food processing equipment and airport equipment. As for fees, IJS charges a reasonable 0.18%, or $18 per $10,000 invested. If you're into options, selling June 16 $86 puts looks interesting. As I write this, it's got a bid price of $1.10 for a 1.3% yield. On an annualized basis, that's 15.3%. With 31 days to expiration, the odds of having the shares put to you are probably 50/50ths. A growth play. For the growth play, I'm going with the JP Morgan Diversified Return US Small Cap Equity ETF, JPSE, which tracks the performance of the JP Morgan Diversified Factor US Small Cap Equity Index. The rules-based index utilizes factors such as value, quality, and momentum to select the components that make up its constituents. Morningstar rates it 4 stars out of 5 and considers it a small cap blend rather than a straight-up growth fund. The weighted average market cap is $2.87 billion with P/E and P/B ratios of 12.42x and 1.61x, respectively. Both ratios are higher than the value ETF from above. The ETF has 576 holdings, with the top 10 accounting for less than 4% of its $385 million in net assets. The top 3 sectors by weight are healthcare, 11.4%, industrials, 10.9%, and tied for third are technology and financials, 10.8%. 3 names you might recognize in the top 10 include Taylor Morrison Home, TMHC, an Arizona-based home builder, Celsius Holdings, CELH, a functional beverage company partially owned by PepsiCo, PEP, and Coca-Cola Consolidated, Coke, the largest independent Coca-Cola bottler in the U.S. A further afield play. The one thing you'll notice about this final small cap pick is that its performance year to date is much better than the other 2 funds. The Vanguard FTSE All World XA Small Cap ETF, VSS, is up 6.3% YTD, compared to a 1.4% drop for JPSE and a 3.8% decline for IJS. This is because international small cap stocks do best in rising interest rate environments. Very inexpensive at 0.07%, the median market cap of its 4,269 holdings is $1.7 billion, while the P/E and P/B are 12.4x and 1.3x, respectively, about the same as JPSE. Developed markets account for 75% of the fund's $8.5 billion net assets, with emerging markets accounting for the rest. The top three countries by weight are Canada, 15.6%, Japan, 13.6%, and the United Kingdom, 9.60%. As the ETF's name implies, it invests everywhere but in the US. With mostly Canadian companies in the top 10, American investors will probably recognize Cameco, CCJ, Ritchie Brothers Auctioneers, RBA, and OpenText, OTEX. Of the three ETFs covered in this article, VSS is undoubtedly the one with the most momentum. However, if you compare its performance over the past 5 years, it's down nearly 9%. VSS is significantly lagging behind IJS, up 8.1%, and JPSE, up 23.5%. Each of the trio is interesting in their own way. However, regarding long-term, risk-adjusted returns, JPSE is your best bet to ride the impending small-cap wave.